stock volume plummeted, causing panic selling, but then the stock price stopped falling and rose immediately. Even more frustratingly, it doubled later. If you often encounter such situation, then you must learn the bottom bearish double volume strategy that I'm going to share today. Learn this method and easily capture explosive rises. Hello everyone, I'm Angie. In this video, I will share with you a volume price trading model that has been shared by Wong Champion. Once a stock that has fallen on high volume shows this signal, it is often a sign that the big players are pulling up to explode. I have summarized 4 key points. If you want to ambush explosive rises, you must listen carefully to this video today. Like and save this video, you will gain a lot. This channel provides continuous updates on market volume and price strategy. We have already produced so many valuable videos related to trading volume. We will continue to share practical and well-received volume and price strategy video in the future. If you don't want to miss them, be sure to subscribe to our channel and turn on notification so that you can listen to them as soon as possible.
Today's bottom bearish double volume model has 2 types. Let's first take a look at the condition for model 1, which have 4 points. First, the trading volume suddenly doubles during the late stage of the stock price decline. Second, the stock price hits a low during the past 20 days. Third, the closing price of the bullish candle breaks through the opening price of the double volume bearish candle as the buy point. Note that the bullish candle may appear the next day or after several days. Fourth, the lowest price of the double volume bearish candle is the stop loss point. Let's take a look at a specific case for position 1. This stock had a volume increase after an uptrend, and the trading volume increased significantly. How do we determine if the volume of the bearish candle is caused by the big player buying or selling? We draw a horizontal line at the opening price of the bearish candle corresponding to the volume. And we can see that the stock price did not break through the opening price of the bearish candle. At this point, we can infer that the big player is not buying, and therefore we don't need to buy either. At position 2, the stock price experienced a sudden large volume decline after moving sideways. The next day, the stock price saw a large volume surge and broke through the opening price of the double volume bearish candlestick. We know that the big player was buying because if it was the big player selling, they won't have lifted the stock price back up. This is because the institutional would not be foolish enough to let retail investors sell at a higher price than their own position. So, when the stock price breaks through the opening price of the double volume bearish candlestick, we can confirm that the probability of a rise is high. Buying at this point led to a large 55% increase in just 15 days. For this stock, after a significant drop in price, the trading volume suddenly increased significantly. To determine whether the volume spike is due to buying or selling by the big players, we use the same method of drawing a horizontal line at the opening price of the corresponding candlestick of the double volume. We can see that the stock price did not break through this line on the second day. However, on the third day, the price successfully broke through this line and continued to rise significantly, providing a good opportunity for us to buy. We bought at this point and the stock rose sharply, increasing by 88% in just 30 days. If this significant drop was caused by the big player selling, would the stock price rise again and break through the opening price of the double volume? Let's take a look at this case. After a period of decline, the trading volume suddenly becomes significantly larger and a double volume bearish candle appears. However, the stock price continued to decline and hits a new low. On the 6th day, It opens high with high volume and breaks the opening price of the bearish candle. Does this comply with the model? If you think it does, please reply yes in the comment section. If not, please reply no. The second model of bottom bearish double volume includes 4 points. After a significant decline in stock price, trading volume suddenly increases and the price gap up and then move lower, forming a false bearish candlestick. The stock price then stops falling and closes higher or continues to decline with lower volume and without filling the gap. When the stock price breaks above the closing price of the bearish candlestick, is a buy signal. In the first case, the stock price dropped for a period of time before jumping up with gap. At the same time, trading volume increases substantially, meeting the criteria for the bottom bearish double volume model too. To determine whether the increased volume represents the big players buying or selling, we draw a horizontal line at the closing price of the corresponding candlestick. If the stock price can break through this level later on, it indicates that the big players are buying. In this case, the stock price broke through the closing price on the second day, confirming that the big players are buying. We can then buy at this level. And on the third day, the stock price successfully rises double in just 10 days. Did you find this impressive? If so, please give the video a like. Here are some important points to keep in mind. A double of trading volume can occur with either a true or false bearish candle, but it must have double volume. A false bearish candle must have a gap to be more certain of an action of the big players. The earlier the stock price breaks through the closing or opening price of the double bearish candle, the higher the success rate. Note that if the double bearish candle is a true dark candle, the breakthrough point is the upper edge of its body. If it is a false bullish candle, the breakthrough point is the lower edge of its body. The stop loss point is set when the stock price falls below the lowest price of the double bearish candle.
Have you learned it? What other knowledge would you like to learn? Please leave a comment in the comment section. Your comments and likes are the driving force for me to create more exciting content. This is Angie. Subscribe to the channel for more great content. See you in the next episode. Bye bye.